Hello, wonderful. This is Susan, protecting taxpayers. How? By empowering and illuminating you with easy to understand tax information. Today, I'm bringing you 8 crucial historic tax updates that has taken place since January 1st, 2018 to December 31st, 2025. So that's 8 years that a lot of these new tax laws has taken place. And so I'm going to start with the first one. And the first one, I just want to give you the exact date. The IRS will open January 28, 2019, and the deadline is April 15th, 2019. And for S corporations is March 15th, 2019. And for tax update number 2, the 1048 and the 1040 EC doesn't exist anymore. They have a new 1040 that is, it looks like a postcard. It actually only takes half the page on each side. And it's for individuals that only have W-2 income, interest, dividends, pensions, and Social Security income. But this new 1040 also has 6 schedules to choose from. And I'm just going to go very quickly through each one of them. And let's start with schedule number 1. The schedule number 1 is to report additional income like self-employment income, S corporation income, rental, capital gains, unemployment income, and adjustments to those incomes. And now let's go to schedule number 2. Schedule number 2 is to pay AMT or to pay health insurance penalty if you received an overpayment when you purchase your health insurance through the marketplace or Obamacare. And then we have Schedule 3. Schedule 3 is to calculate the non-refundable credits like child and dependent care credits, educational credits, and retirement savings credit. And it's good because you get some credit for saving for your retirement. Now let's go to Schedule 4. Schedule 4 is to calculate your self-employment tax, the IRA penalty for early withdrawal if you withdraw it before 59.5, and also it has a health insurance responsibility, which really is health insurance penalty, right? And now let's go to Schedule 5, and Schedule 5 is for other payments and refundable credits like the 2018 estimated taxes that you paid for 2018, and net premium tax credit is for people who overpaid for health insurance when they purchased it through the marketplace. And last is schedule number 6 is for taxpayers with foreign addresses and or for taxpayers who want to give authority to the IRS for another person to discuss their tax return. And now let's go to tax update number 3. No exemption, no personal exemptions for anyone. Remember how we used to get for each person $4,050? Not anymore. They actually took that out, but we have a new increase standard deduction. As you can see, it's about 89% more in deductions for each category, which means you're going to pay less taxes. And besides that, we have a federal tax historic change. The rates have gone down about 2 to 3%. So it's actually excellent because that means you're going to pay less in federal taxes. And now let's go to tax update number 4. Child tax credit. You know, it's for children that are 16 or younger. Well, this credit was increased to $2,000 and up to $1,400 can be refundable. It can generally be taken by single people who make $200,000 or less, or married filing jointly who make $400,000 or less. And that means that more people are going to be able to take these credits. Now, the only thing is that only people with Social Security can take this credit. They do not give it now anymore to people with ITIN or individual taxpayer identification number. But let's look at tax update number 5. Credit for older dependent, 17 and up That means for teenagers all the way until elderlies. And it's a non-refundable credit that offsets your tax liability up to $500. And this credit is for people who have Social Security or that have also ITIN. So those people with ITIN get that credit. And now let's go to tax update number 6. There are 3 major changes in the Schedule A. No income limit to itemized deductions. They took it out. But state and local income tax, property tax, sales tax is now limited to a combined total of $10,000 for married filing jointly and $5,000 for married filing separate. And this is the third one is something it's very important for people who are employed and used to deduct their job expenses on a Schedule A. They took that out. So W-2 job-related expenses can no longer be taken. So a word of advice is that even while you are employed, if you don't have a business yet, it is wise to create your own business because you can deduct the business expenses and you can discover your calling. Now, business are like babies, you know. You gotta give them care, you gotta give them time and attention. But little by little, they grow. And when they grow, you have the potential of being able to leave your job and be of service in your unique way to other people. So start your business little by little so later on you can really enjoy its fruits. And a huge benefit is that you pay less taxes because you get to deduct all those business expenses. So now let's go to tax update number 7. And there is no deductions anymore for entertainment expenses. Entertainments with clients and or prospects. Entertainments like end of year celebration for clients, meal or entertainments at spas, golf course, movie theaters, sporting events with clients. They took it out. So this is a word of advice. It would be good if instead we spend the money for marketing or advertising. Let's go to tax update number 8. What is this QBI? Qualified business income deduction. It's been called Section 199A. It's been called Section 199. Qualified business income deduction. It's the same thing. It's really a 20% deduction on your business net income so that you pay less taxes. Sort of like getting a second standard deduction, but for business owners, so they pay less taxes. This is huge. I mean, this is fabulous for business owners. And you know what? Let me just show you an example. Like, let's take the example of Joshua. He earned $100,000. He's married filing jointly, so he gets a $24,000 standard deduction, which leaves him with $76,000 as taxable income. But wait, since this $100,000 is business income, he gets 20% deduction based on the $76,000, and now he gets another deduction of $15,200. So now he doesn't pay taxes on the $76,000. He pays taxes on the $60,800. That's a huge difference, you know? So it's great. And you know what? It can be taken by people who have an S corporation, who have an LLC, who are real estate investors, who are self-employed, except a C corporation. But C corporations now do not have these different tax rates. Now, instead of having 15, 20, or 37 or 39, they only have one flat rate, which is 21%. So it's a little bit better there. There's a lot of rules and limitations that apply to this QBI, but it's really important for you to get more information because you want to take advantage of this discount the proper way. And I actually created a class that gives more information in regards to this QBI. So especially for real estate investors, there is huge advantage there to pay less taxes. So I encourage you to find out more about it because it's going to help you pay less taxes and you want to make sure you do it the right way, So now, I'm just going to give you some reminders real quick. Remember to file your 1099 miscellaneous and your W-2 by January 31st of 2019. And for you business owners, remember to renew your business with the state. And if you think you may not reach that April 15th deadline, file an extension. It is okay to file an extension. And contribute to your Roth or traditional IRA before April 15th, 2019 for the tax year of 2018. And of course, the best path is the Roth IRA, especially right now where taxes have gone down a little bit. And next, if you have health insurance through the marketplace or Obamacare, you are supposed to get a form 1095A. Do not do your taxes without this form, because this form is needed to file the form 8962. So make sure you have or obtain that form before you do your taxes. And last, remember that the IRS does not call to obtain payment or to give us reimbursement. They always send letters. I myself have received phone calls from people that pretend to be from the IRS, but obviously they're not. So be careful from those calls. Don't take them. When you communicate with the IRS, just communicate by mail. Thank you for your attention. I hope this information really helped. If you like this video, please subscribe, share with your family and friends. I will embrace your inspiring comments. And if you have questions, send them. I'll be more than happy to assist. Until next time, remind your heart to smile and fight for your dreams with honor and undying determination. Thank you so much.